Mic check, mic check. This is M2C Trades back again for some more trading. I forgot how to stream, but we are live now, hopefully. Let me check on my end. Boom, boom, boom. Yeah, looks like we are live. Alright, let's go. Um, so I'm using volume-based candles. I'm on the hourly time frame. We've got a significant daily range that we're in at the moment, and I think price is likely going for these highs at the moment at 25,880. So that's the thesis that I'm working with. So we're on the hourly time frame to see what levels that we can work with to see if what levels price may be interested on the hourly before a reversal and hopefully a push up into these highs. We have had a significant sell-off today, so it'll be interesting to see whether this is a something that we can obviously, if the bulls can make a fight back to take out this liquidity, or are we going for this liquidity at the lows. So we have had a news driver. So that'll be interesting to see where price may want to go. So okay. So let's go. Um, alright. So what do we have here? Ooh-wee. So yeah. So the game plan is to wait for this candle to close, wait for the new 10 o'clock hourly candle open, and then hopefully look for a trade to go long, baby. We're risking $400 for one trade. One and done today. One and done. So this is an area, this is a potential area of interest to get in on this trade, right there. Also, there's another potential area that may put up a defense down here. So we just watch carefully. So it's a 100-point range, the point of interest, but we have to bear in mind the potential level that price may be reaching for is at 25,881. being patient, just watching the candles doing its things. The game plan is to wait for the 10 a.m. hourly open. See that then we can go on the lower time frame to see what we can see on the lowest time structure, 5 minute, 4 minute. The POI that we're looking at the moment is for these 4 a.m. hourly FEG to hold. If we close below it at 10 a.m. Eastern Standard Price, then the last POI we're looking at is the 25,470 area. But we envisage these lows to hold. So we're looking at these lows to be for want of a better word, the protected low to hold. For prices then to push up into our drawn liquidity at the highs there. As you can see, we took out yesterday's lows. These are yesterday's lows, I believe. We shot yesterday's lows. So I'm hoping that we take out these highs now. Yesterday itself was really interesting because we swept these highs that had a lot of liquidity from last week Friday, last week's high, and then we sold off to take out essentially Thursday's lows. One is last Wednesday's lows, and we stopped at Monday's lows. So we didn't quite take out last week's lows. I don't expect us to take out last week's lows. I expect these lows to hold. So the first POI that we're interested in, it doesn't look like it's going to hold. So we're just watching it for now. You can see there's a lot of selling in this candle, not surprising. It's during regular opening hours where the big boys are trading, are involved. Volume significantly picks up, and these volume candles pick up that volume. So this candle may have signified, signified obviously a lot of volume. So it could have been a lot of selling, even though it's a bullish candle. And right now it could be a lot of buying because we know the market makers and the big institutions, they like to buy below lows. So, and during regular opening hours. So hopefully they may have got into their positions. Obviously there were some that got into their positions here, but the majority of them will be using this volume to fill their orders at these prices. So we got our POI. So our POI is not quite been, it's been respected. It's been respected. It's been respected. We're not going to get excited. We're not going to go to lower time frame. We're just going to keep watching. Keep watching and just follow the game plan, which is to go on the lower time frame. Once a 10 o'clock candle, hourly candle is open up, then we can go on the lower time frame to see what we see from there. We're not gonna feel any type of formal. We're not gonna feel we need to get involved in this move. Nah, none of that. None of that. We don't need to trade like that. So I bought another account since my last post on my message board on my channel. I think it was $45. I think I got it on Black Friday. So we've had that for about 11 days, maybe 10 days. I haven't traded it at all. I think I only traded it maybe 2 times at the tops. if this low doesn't hold and we close below on the hourly, then yeah, another 200 flush, 200 point flush is well within the cards. So the POI for the 4 a.m. hourly candle to hold, that's no longer valid, so we'll just take it out. So the current POI we're looking at is just in the 25,470 area. It's a range. It's basically from this low 25,383 to the 25,470 area. So this is the area that we want to trade from. That's the range. All right, we're gonna keep the discipline. We're gonna keep the energy up, and we're not gonna go on the low time frame until we need to, or until we expect the trade to form. I mean, this could be the bottom, um, you know, but we want this hourly candle to close. We want the new hourly candle to open, and then our interest would be basically the open price of the 10 a.m. candle. We look around there to see what we see from there. So the longs were in this move from last night. What am I talking about? Longs. There was a long formed around here, right there. So there are a lot of longs got in there, and they benefited. What? We got a significant push up to 200 points. They're being stopped out now. Their stops are being used as liquidity. So what I mean this for this low to hold is we don't expect closes hourly closes below here. So a sweep is fine below this swing point, but we don't want an hourly close. So what I mean by hold is no closes, no hourly closes below this low. So again, this volume, this selling essentially started from the news. I think the 8:30 news that we had this morning, and that selling basically came in from there. So I mean, we could have got involved in this move lower, but given that the daily bias I had was bullish due to liquidity being top up here, I'd rather stick with the direction of my bias. So my bias was bullish. I'd rather stick in that direction. So I'm not going to feel any type of way if we were to take an L going long. At least if it was in line with my bias, and obviously with the bias, there is a lot of liquidity that's being built up here. We did take out these highs, but the actual high in question is not that high. It's the high from the 6th of November. That's where the liquidity is. Alright, so here we go. Game time. Alright, so what we have is the new early open right there. We'll stick with it, we'll put it in there. Go on the 5 minute, and then let's just see what we see. So essentially, from the 9:30 open, we've kind of sold off what 300 points. Wow. So I need to reduce my size and take that into account. And this is where the consolidation took place early on. And so consolidation took place, push up on the new before the news as I pulled back from that sell-off, and then the volume came in. We took out these buys, early buys. Now we're good to go higher if price wants to go higher, but we need some more structure. I'm gonna go on the 4 minute time frame. That's something I've been experimenting with, so let's see if we do get some success with it. I'm not gonna fiddle with the screen. That's just something that I've noticed I like to do a lot. Mess around with the screen, but yeah. Right now we've got the hourly open at 25,414. That's today's hourly open. We've pushed lower. This 25,8383 low may hold, may not hold. Looks like we have swept the 9 a.m. lows. Yeah, so 9 a.m. lows have been swept, but we need the lower time frame entry, and we're gonna try to get in on this long on the 4 minute time frame. So nothing of note right now that I can use to enter from. So I'll just wait and see what price does. Very aggressive selling. There's no point in trying to go against this at the moment. We have to see some signs of a potential bottom and some structure for us to be able to use to go for long. some people may be entering this with a 50-point stop. And yeah, RR may be good because obviously they're risking 50 points to potentially gain what, 400 points, which is maybe a 4-hour trade. So we respected the 25.383. That was our POI. That was the last line of defense. We didn't want any hourly closes below there. A sweep was fine, but we still may come down and sweep this level, as this is the low that initiated. That was the low of the Asia session that initiated the push up. So there's still liquidity down here, I would say, given that we had these lows respecting this low. So I suspect price may still, it doesn't have to, but there's a potential for these lows to be taken as well. But yeah, now we still wait. We just gotta wait, be patient, and not feel any type of way about the price action that we're seeing at the moment. Um, I may be interested in entering if I see one more manipulation of these lows. It doesn't have to happen. Let me change the color. Ideally, I want to see a manipulation here. But I know full well this may be the low of the regular hours trading session. That potentially may be the low. But ideally, I want to see this to be taken out. Doesn't have to be taken out. Again, you have to bear that in mind. We don't have to be married to an idea. Have to be flexible. So this looks like to me, depending on how we close above here, that this is potentially the low of the regular trading hours. We took out that high, so this is interesting. Is this going to be a breakaway run out higher, or are we going to be in for a pullback? So yeah, so we'll watch this candle just to see what we see from it. So right now I'm questioning to see did I miss an opportunity to enter this trade at an earlier point in time based on my system. Hmm, could have entered earlier based off my system. Hmm, potentially I could have entered here when we had two candle closures below. Actually, we didn't really. Yeah, we had two candle closures below this low. This is a significant low. I could have entered off that. I could have entered off the third 452, the 20th 20-point stop. But yeah, so it looks like this is the low now for now. Um, gonna wait for this candle to close. So what I'm looking for now is let this 4-minute candle close, and I want it to close above its current position. I don't want it to close and tap into this high here. I want it to close there, and I need one violent push lower, maybe 100-point drop for me to be able to enter this trade. Really, there's no point entering here now. So I'm looking for one really violent push lower. How long have we been shooting now? 30 minutes. Complete Zen light mode. No revenge trading, no FOMO trading, no let me quickly take a 5-point scalp. None of that. Alright, so I don't see anything that's in line with my entry model. I don't like to trade lower than the 5-minute, although I'm experimenting with the 4-minute. So yeah, so for now, there's no entry, although I can see the draw liquidity, 880. I can see these lows held. In hindsight, we did mark out this level as an important level, but we didn't really get our our entry setup form here. So we're looking for the entry to form some form here, but it doesn't look like it is. So we're gonna wait another 10 more minutes to see if we do get that pullback. So I'm looking for a pullback into this area here. Let's see if we look on the cat hourly. Do we see anything of note? Um, no, on the hourly there's nothing of note. So structure-wise that we haven't already noted and taken into account. So this is a breakaway candle. This is a breakaway candle right here. This candle here. It's a breakaway candle. A lot of people are probably entering the open price of that candle. But I want that breakaway candle to be manipulated. That's the only way that I'll be able to enter this trade. If I don't, then it is what it is, isn't it? We missed out. Should we have gone a lower time frame given how violent price was based on the niche driver? Maybe. Um, are the low time frames a good idea to use occasionally? Yeah, for me, yeah. Um, but you have to be careful with the low time frames. You have to align the time frames and make sure the daily and the hourly is in line with the direction that you want to go in. And obviously, we already had the hourly and the daily bias into account. Could we have entered off the 1 minute in hindsight now? Let's look at it. Would my entry criteria have formed better on the 1 minute? Let's just see. Um, yeah, yeah, it would have formed, and also another confirmation would have been this hourly level that we expected either to be swept to be hold, but it could have been swept, but to hold in terms of no hourly closes below it. So yeah, so the 1 minute would have presented me with an entry, uh, but with the 1 minute you have to be careful because the entry criteria, if you've got entry criteria, you're gonna get them forming all the time. So that's the and obviously more traps and more manipulations involved. That's why it's really really important to ensure that you've also got the hourly and the daily buys. Um, you've taken those into account. But if you just look for the entry criteria in the 1 minute, then that's a world of hurt there. But, all right. So this is the manipulation that we're looking for. We're looking for a manipulation below 25,500. Are we gonna get it? Let's see. also have to take into account today maybe a trend day. With trend day, the normal cost of things is completely thrown out the window, and just price just runs in it. So we may just run up to 25,880 to 26,000. You know what I mean? So I don't know. But this candle here, this candle will tell us everything. Um, if we close above this candle here, and this is this is just a crazy run. It's gonna run. It's gonna continue to run. We've marked up this area. I'm not sure why. Oh yeah, this is the. I think this may be the hourly 4 a.m. hourly FEG that was in play at the time. I think I took it out, but I'm not sure why it's still in there. Yeah, so this is this is the hourly FEG. So this is the initial point of interest that we're looking at before the 9 o'clock candle closed, as a potential area for price to reverse off, and this was the lower end of that range. So I'm gonna go on the 4 minute. I was using the 4 minute, experimenting with the 4 minute. Okay, let me just see here. Yeah, so this. Yeah, so what I'm seeing now, this is a breakaway. Uh, another breakaway gap has formed. Um, let's see. So what I'll do now, I'll just go on a 5 minute, and let me take this off. And really, really aggressive price action. Literally, in less than 20 minutes, we've kind of moved what, almost 200, yeah, 200 points. All right, so the 630s is in sight. So sometimes like this, it's like you get the correct answers, but you don't benefit. But obviously, trading is not about just analyzing; it's about actually taking part, putting the risk on, and accepting the consequences really. So I wasn't willing to just put the risk on without getting some sort of further confirmation. I was waiting for the 5 minute confirmation. None of that materialized, and obviously we've had a almost 250 point run. Next draw is the 630 level. Are we gonna respect it? Are we gonna sweep it? I do not know. Um, but I'm not comfortable buying off this area. Um, this may be an area to short off for a short-term pullback. So I'm gonna. This is an area to potentially short off now. Once the 630, once we reach the 630. But yeah, I'm not willing to put risk on for that. I'm considering maybe putting on two micros, risking $80 just to see if that trade idea does work out. But again, those trades are inherently risky, and if you're going against the daily or hourly bias, then yeah, more likely than not, you're gonna lose. That's what I found from my experience anyway. So we've taken out the 630 and taken out the 630. Let me just see. Yeah, so we may get a 100 point pullback. So I'll see if that's, yeah, I think I'll just take that. But I know that it's silly given that we've got this is the drawn liquidity, but I'm willing to do that on low risk on two micros, $80 risk to get potentially sorry, $80 risk to potentially get 400. So yeah, because I'm looking to get 100 points out of that move. So um, where are we? Going to the micros. This Mm, so it's a risky play. Da, 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 da. Ideally, I should have waited for what I'll do. I'll increase the risk and wait for this candle to close because this um I'm hoping um, uh, so the first thing I'm hoping these highs to hold, and then there's a risk that when this kind of closes the high, maybe manipulate. So I'm just gonna wait to see what that does. Um, what did I want? Let me go back to MQ. I think I wanted price to go to here. Let me go back to MQ. Yeah. So I want to. 511. Thank you. All right, so we'll see. I'm waiting for this candle to close, and yeah, I botched up this trade, so I could pay a price really and truly. This is a counter trend trade, very risky. Do you know what? I'm probably gonna get, yeah. I reckon it still may go to where I think it will go, but given that I'm counter trend trading, yeah, I'll break even, man. If it works, it works. If it doesn't, it doesn't. But yeah, ideally I want the price to push lower to 514. If it does, it's great. If not, um, but I think we may it may push up now. Still respect the 630 highs, and then go lower. We'll see. I know it's a bit silly expecting a big move on a bullish day, but yeah, it is what it is, man. So, so my concern is like this high now may be manipulated. Price may manipulate these lows, then come back again, take these highs, and then still go lower to 100. So I shouldn't really be cutting the risk. Shouldn't really be doing that. But obviously I am. I've done it. Yeah, there she goes. The 610 manipulation is inside, you know what I mean? But it's a question of are we gonna manipulate the 610 first? Are we gonna manipulate the 510 first? Which one is it? I think we are. I mean, if we're bullish, I think it should manipulate the low one first before going higher. You would think, but obviously A and Q does what it wants to do. It does what it wants to do. We're 50 points in the money. This is not a good trade from my point of view because I'm sitting in a trade that I know can pull back on me like a rocket. It's a counter trend trade. At least we did manage the risk, but initially we budged up the entry. So price can react from anywhere here. It doesn't have to go to the 510s. It can react from this area and then pull back violently. But yeah, that's the risk that I'm taking. This is a counter trend trade. We've managed it by reducing the risk. Price is likely heading for the 880s. But because we missed the long entry, I wanted to take a quick trade just to see if we can get to the 510s. But it's extremely risky trade. Initially, when I went in, I budged up the entry, and we still may get stopped out break even with two micros. Um, Price may still manipulate us out and take out the 610s and still go to the 510s, but we're hoping that it goes to the 510s first. Yeah, it's either 614 or 514. Which one of them's gonna get hit first? But 614s can still get hit, and then 514 get hit, and then we go to the 880s. But obviously, anybody that's short right now is trading against the overall bias, in my opinion. So the danger is now we've got liquidity sitting at 630. We've kind of went one tick up off that liquidity and went lower. This looks like a breakaway gap here to the downside, but it can still be manipulated. Wow, we've got 8 seconds. So what price may do now is just push up. Once this candle closes on a 5 minute, push up, take out this high, and then push lower. And that's what we don't want to happen. And push, what am I doing? And push lower. And what we want is, there's a range here in play. The range is between here and here. And we want price to take out the lows of this range. But again, there's no guarantee. We don't, price can do whatever it likes. Price can react from the midline this range and still go up. But the risk, if you do short, you going against the bias, which is what I'm doing obviously because I missed my entry because I was waiting on a 5 minute confirmation entry. I didn't get it, and obviously I had FOMO and I managed the risk by going with 2 micros. But even then, I had to open up my stop wide initially. So it looks like it's moving now. So we've got 300 ticks. But again, price can react from this area. Price can react from this area here. 538. So this 538 may be support now. As you can see, it's reacting to it. Just have to be flexible trading. It's like, I mean, I'm not a profitable trader, but I'm a good analysis. So that's obviously analysis and trading are two different things. I'm trading a tick account or funding ticks account, not tick funding ticks, and 2 micros. Still long way to go. I was looking to risk 400, but because I was doing a counter trend trade, I only risked 2 micros. As you can see, we're getting support from the 538 area. Price is reacting to that area as expected. So some longs may be getting involved here, but the risk is that price sweeps these lows and taps into this fair value gap. That's the risk for those looking to go long here, but I think the longs are right. We are going higher. We're likely going higher. Obviously, no one knows what's going to happen in the market. So again, we may sweep this low and then reverse again or respect it. We can go on the low time frame to see if we see anything of note, but obviously with how violent price is, you're probably not going to see much, but we can go on there. Alright, so we formed a small range here. This is interesting for me. Right here, there's a range. Are we going to continue lower? Let's see. It may go to the top side of this range at 557. It may even want to continue this higher. That's the risk for us. For the short, we'll have to wait for this counter to close before we can determine if this range is going to hold. It looks like this is an attempted continuation of the does. Yeah, so this could be, let me just quickly. Yeah, so this looks like a continuation. Okay, so the range has finally formed. The actual, actually, I'm just talking a lot of doo-doo here. So we've got 30 seconds for this counter to close to confirm the size of this 1 minute range. But the range highs is confirmed at 557. So price may go to 557 and or may go to this high here at 547. So on the 1 minute, we can argue that we've got this range now. We've got a nice range between 557 and 523. So let's see which side price wants to break out from this range, this 1 minute range. Very risky area to trade. It's likely that it will go for the 557, but because of the liquidity down here, it's risky. Alright, so we've taken out the highs 557. Now, yes, so we've taken out the 557 highs. Let's see what she does. Is she going to break out and close above this range? It'll be interesting to see. And the next range is a 5 minute range at 574. Now, as you can see, we're sweeping, we're testing this range, we haven't broken out. Are we going to break out? It's a question mark. Are we going to run higher? It's another question mark. Are we just going to sweep and then turn around and take out these lows? It's another question mark. Is the bottom in now, right now, for the push higher? Another question mark. So we don't know. All we know, there's liquidity here. So this low is respected this low, creating liquidity. So a lot of people are looking at this, looking to enter. So if we look at the 1 minute, we've closed above that range. We've closed above that range high. So this candle will be interesting. When this candle closes, will be really interesting for me to see what price does. If we close above that candle, then that means that this is at risk. This is potentially so we want this to be a rejection candle. We don't mind it being swept, but we want it to be a rejection candle. If it's not rejection candle, it's likely we're going to get stopped out. Okay, it looks like a rejection candle. It's too early. It looks like a rejection candle. It looks like we're going to the outside of range. Uh, 522s. You know what? I'll just take my edge. I'll take it off of 522s if you can get it there. Alright, so we are. So that was 350 ticks. There's no guarantee that 5 minute lows was gonna be swept. So I just thought, you know what, just go for the 1 minute target. Obviously now that I said that, now that's been taken out. But yeah, so we got 90 points out of that. And had we held, we would have got out there. $360. There it is, yeah. So we left 20 points on the table. But yeah, so that trade worked out. But not all trades like that work out. Counter trend trades. So let's just take all this off now. Go back to this. Let's see what we see. Go back on the 5 minute time frame. And on the 5 minute time frame, we respected that high, the 630 highs. On the MAQs, we swept those highs. So I'm expecting some sort of now bottom to be put in here. There are two potential scenarios that we take out these lows. I'd rather price not take out these lows. I'd rather form a low here so we can push higher. So that's what we're looking at. Potentially this is an entry here. Right there. Potentially. Let this candle close and then we'll be able to confirm whether it's potential entry. Actually, yeah, it's safer to wait for the closure. I don't take it on the third candle or the following candle's open price. So we're watching this low now. So there's a lot of liquidity down here. Um, we've kind of rebalanced this candle. We may still come back down, take out these lows and go, but yeah, I'm bullish and I'm willing to put money on it. Um, Not really disappointed I took that trade, um, the counter trend trade against my buys. I was not really happy with that performance there, even though it was a profitable trade. But the management of it was really bad. So there are two areas price can lift off from. So it's this candle, um, and or potentially the 450 level. I think it may run off from this candle, um, but I need a sweep first. A sweep down here. We need a sweep of this level. So something like this, and we want this 5 minute low to hold again. Hold meaning we don't want any 5 minute closures below it. But that area can also be a trap area, so we just have to be extra cautious because it can also price can also travel again for another two candles and then reverse. Yeah, and obviously by the time it reverses, it might have taken a 380 lows. Um, yeah, I think this is a trap here. Getting the vibes, it's a trap. It's a trap, baby. Be right back. So potential downside move to take out this liquidity, possibly all the way here. Tempted to join it, but again, against my bias, that's be silly, man. But yeah, so there's a potential to go low here. If that push lower fails, this might be the run up to the run up higher. Trading views messing up. So we reacted to the hourly FEG from the 4 a.m. candle on the session open. Alright, beautiful candle, the 5 minute there. Alright, so yeah, so we took out these highs and then did we took out did we take them out or respect them? Yeah, we respected these highs. I would have been interested in maybe shorting from there, 563, to go to these levels, 453. So maybe another 100 point run lower is on the cards. But again, you're going against the likely direction for the day. Looks like we're going to be chopping around um, now for a little while. As you can see, we've got this swing point looks like price is being compressed um, between here and here. Um, what am I doing? And over here. See, so chopping around for a bit. The big move of the day maybe might have been a sell-off. We may have a slow grind higher. I'll wait another 15 minutes. If I see, um, I want to see which is a sweep of these lows. I think I may go in then. Put a trade on. Yeah, this trade would have worked out, but yeah, I was looking for a 563 sweep. But again, sometimes when you're looking for a sweep, you don't get it. You get respect, and sometimes when you're looking for a counter to be respected, you get a sweep. So just one of those things, really. Really disappointed with the trade that I took on. I botched it. I botched the entry, botched the management. Didn't hold to the take profit price, which was 514. I think I left or 514, and I think I closed out 520, 23, 24. I think 10 points short. Um, off the target. I did get 9 points, but 9 points when I risked so much didn't really mean much. I did expect the 630s to hold. It did hold on the NQ contract, but it didn't hold the MNQ contract, so that kind of confused me. Um, but it's just the management was has a lot of room for improvement. But you know that's the thing that you can work on really. So I see price creating a lot of liquidity. So we've got liquidity now at the 628. We've got liquidity now at the 561s. We'll have more liquidity at the 561s if we take out these 450s, which we are likely to take out right now, 450s and 448s. Um, really interesting day, really interesting day in terms of price action. I'm still extremely bullish. We expected a 25383 to be a key point of interest. It was. Missed the entry for long there. Should have really taken it. I did really get it on a 5 minute setup, which is my preferred time frame for entry. Be right back. Yeah, so these times, these are volume-based candles, so you'll have to have a like paid subscription for Trading View to be able to see them. As you can see, I've always been told, yeah, it's best to trade the regular trading hours, given that volume comes in at the regular trading hours and moves are much cleaner, and you can see why moves would be much cleaner because of look at all these kind of the thickness of these candles here that indicates volume, and that kind of shows well it's probably best to trade when there's a lot of volume, and that kind of illustrates it really. That kind of reinforces it as to why you should be trading in regular trading hours instead of the Asia or London sessions. Although I do still trade them, but I reduced the size to about 25%, 40% of my usual size, to 40% depending on how confident I am in the setup, but usually 25%. Um, so here we've kind of we're coming up to 2 hour window of the regular trading session, and we still haven't got the move that we wanted, which is a drawn liquidity. I had a long bias. Drawn liquidity is 25,880. So that's what we're expecting price to push for. Um, right now we've got a lot of liquidity everywhere. So we've got liquidity right there at the 630s. As you can see, this low, this high respected that high, pushed away, indicating liquidity. Also, we've got liquidity at these highs here. This is a really important high, 563. Again, that high respected that high, pushed away. The next liquidity area that we have is, I believe, it's this candle here, 2545. But those are minor liquidity points. The real liquidity points has already been, it's here, 25383. I think this is going to hold. That's what I suspect, but a sweep may be on the cards. So we may have that slow burning push up higher after we take out this area here. So this, the push lower may go all the way here, or we may just take out this area here. But I don't mind going long once we take this area here, given that longs did get involved in this move up, and they will be stopped out before we push higher. So I'm looking for a sweep of this area before getting in long, for a slow push higher into at least the 630s. Again, if we take out this high here, I'll be minded to go short, but I know I'll be standing like you, basically standing for a freight train, because I still think we may sweep to here. But obviously, I'm going against my bias if I were to go short there. If this pushed up to sweep this level and then sell off to take out that low, that would be nice. Which will be what, almost another 100-point move as well. Yeah, so longs are getting involved here. Longs are in this trade, and yeah, longs are in this trade, so they may get a push up to the 560s, or they may get around through, because this is a risk as well. This runs lower, so we just got to wait and see what she wants to do, really. That's why they say you shouldn't play around in the range. We've got a clear range right now between the 455s and the 563s. That's a range, and we're in the slap bang in the middle of that range. So anybody's guess is which side we break out of this range first. It's anybody's guess, but it looks like we're going higher because this is indicating longs. But at the same time, I want this to be swept out. I want the longs to be taken out before the real move long starts. I'm only trading the evaluation. I only took one trade with 2 micros short against my bias because I was a bit disappointed that for 90 points, but the risk was a bit silly. Although I did reduce the risk to break even at one point for the remainder of the trade. Um, Yes, because I expected these highs to be respected. I saw that the play, and I think I got in at the 610s, 614s, I think it was. My risk would have been 20 points for these highs to these highs, but then I saw these highs get swept. Then I moved it slightly higher than I would have liked, and then I brought it back down when I think price moved in my favor. And then I got out because I wanted a clean 100 points. I got out I think the 522s, basically 10.524s on a 1 minute structure instead of holding for the for I think 510s. I believe it was 510s, yeah, instead of for 5 minute structure. So here we are. We're taking out the longs that got involved in this move. We're taking out the longs that were attracted to go along here. And we want this swing low to be taken out. This is essentially a range right there, purple. So we're just playing the range. Whichever side price breaks out from, we'll take a position going to the opposite side of the range. So we're just waiting to see which side of the range gets taken out first. So I can go on the 1 minute just to see what we see. I don't normally trade off the 1 minute. So yeah, this is like really bad price action down here. We've got a 1 minute range as well in play right here, which is from 1 minute range is from boom, 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 boom. Let me just see. The 1 minute range is from there to there. So right now it looks like this is going to run to the 520s. Let's see if it runs to the 520s. That's what it looks like. As long as this push, yeah. As long as this low holds, this should run to the 520s. But again, You know, those scalpers are probably looking for that, but obviously we've got this liquidity down here, so that's the risk. I'm not gonna take it, but that's I can see a range there. We'll sweep the low of this range, and we should sweep the highs of this range. Doesn't always work, but usually it does. We've clearly reacted to the midline of this range right now. We've kind of reacted to the midline of this range. We may come back down, respect this low, and still push up to the 520s. So a lot of liquidity is being built up again here, right there. And if the 520s are taken, 563s are the next obvious target, meaning they're building up liquidity down here one more time, for for it to be taken out before it goes higher. Yeah. So as you can see, our thesis was like if the 485s are respected, looks like we respected it, we swept it. Now it should run to the 520s. Should anything can happen. So what you may want to do, we've already tested the lows. We've already kind of swept the lows of this side. It should kind of run, but it may come back to this side of the range again, 500 and go. That's it. So we smashed through the 1 minute range high at 521s. So I don't know what's going to happen now. It may run to the 560s again. It may come back down. We just don't know what it's going to do now. But we did know we had kind of a high. What's the word? We knew there's a likelihood that price will take out the highs of this 1 minute range. Given that it spent 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes below it. So it's building liquidity here, around here. Took the high, so it stopped at everybody here. It still may go lower, it still may go higher. I do not know. But what I do know is I want to see this 5 minute range swept either to the highs or to the lows. Preference is I want us to go take out the lows first because that will give us the long setup that we're looking for. So my preference is like, okay, I want this low to be taken out on the 5 minutes. I want a closure below this range on the 5 minute because that's gonna align with our bias of a long. So once we get closure below here, then we can potentially look for an entry to go long. And obviously our targets are going to be at the 630s, the 730 high at 700, and ultimately the 750, highs here, and then the ultimate highs, which is the 880s. So we've got 3, 4 targets to go for. Really annoyed because today I did see this as an important level, but I just couldn't find an entry to enter off. But in hindsight, Um, once this candle closed and swept below this candle, that means that expansion, we swept below this expansion lows. We respected these hourly lows, which was the Asia lows of the day, which we expected to hold in any case. That was the time that we should have really got in. But yeah, we should have got in on the. In theory, it would have been the best time to get in, but obviously, it's just I was looking for um, a better confirmation entry than this candle here, because obviously the risk here would have been enormous on the 5 minute. But on the 1 minute, it came out clean. So on the 1 minute, this was a clean entry. On the 1 minute, what we had was we had expansion, uh, retracement, another expansion, a sweep, and this is a rejection block here. So rejection block entry here would have been nice on the 1 minute, but again, I'm not really an expert in trading 1 minute time frame. I'm not expert in trading any time frame, but it's not my preferred time frame. You have to be careful with the 1 minute entries because you have to have your time frame analysis on point. So the daily, the hourly, everything has to be on point, and you need to have higher time frames points of interest. Obviously, this level here was a higher time frame point of interest, so we could have entered here, and obviously this was the correct window. But I wanted the hourly close, so we didn't really get much time. So obviously, the hourly closed, the 9 o'clock candle closed, 10 o'clock swept the lows, and it went higher. All right, so it looks like we're about to sweep the lows of this 5 minute range. So what I'm looking for, clean closure, 5 minute closure below here, and here, and then maybe taking basically a 3 bar reversal, and then taking the entry of the third candle, going higher. That's the ideal entry. So price is, as you can see, price is playing games. So Enki's playing games because this swing high respected this range high. As you can see, it didn't really take it out, and as you can see, this low here is respecting this range low, and it hasn't taken out. It's going back into the range. So we're playing games, and what it may do now, it may come out the other side of this range. You just don't know. Which means that if that were to happen, if price pushes up now and takes out this high, that means there's liquidity down here, so we can't really go long. Um, if we do see an entry, given that we see liquidity, blatant liquidity engineered here, this is engineered liquidity because we've got a significant swing point here that's tapped into a fair value gap. That's reversed. Reversed, we've got an expansion higher, attracting a lot of longs. Most of those longs have been stopped up, but not all. And then obviously it may attract even more longs right now with this push up, and this may push up to take out that high. But this is just over analysis. I like to over analyze things, which is not good. The best thing to do is just wait to see which side of this is taken up, and probably the best thing I should be doing is just put in set an alert here, 5:45, and set an alert there. and just go away and do something else. When you get that alert, once the alert gets triggered, then you know that the range has been swept. Then you can make a decision as to if it's something that you're interested in taking part in or not. But at the moment, we're just generating, we're just building liquidity here. We're not really taking liquidity. Just the consolidation range. Also, we have to bear in mind this potentially may hold. So a low can be either respected or not respected. So potentially, even though we've got liquidity down here, we could be tricking shorts. And because our bias is long, we always have to disregard that. Like we always have to not get fixated on the idea of a low being taken out. This low may stay in place; it may not be taken out. And if this high is taken out again, even though I said this, my preference is for this low to be taken out, because our bias is long, we just have to look at what the market is doing and just as long as it's in line with our bias, just accept it and go with it, irrespective of what ideas we have. So my idea is for this low to be manipulated, but again, that doesn't have to be. So we got, it doesn't have to be manipulated, and and there's a good chance if we do take out this high, even though I was saying I wanted to take a short of this range to take out these lows, I'm going against the direction that I'm of my bias. And I think if these highs are taken out now, especially after we got so close to that taking out this low, this that will likely be the move higher. So we'll probably take out the 630s and just continue higher. And I might be willing to put risk on it. I just put a stop there. What are we now? 496. Yeah, but a stop. Yeah. So maybe enter the 470s and I put a 454 or two micros just to see if the idea does work. That's the idea does plan out. But again, it will be a safer option would be a sweep, but we may not get that sweep that I'm looking for. So what's that? 455, 454. So I might just put down okay. Um, I might say this is my last trade of the day, and just say okay, my entry is going to be at 474. My stop is at 454, and that's it. And just see if it works out. Let's look at the hourly. Yeah, what the hourly has done is, yeah, so we don't necessarily need to go all the way down there. So what I'll do is I'll see if we can get an entry off the 470s. I'm interested in the 470s, so I'll just put a risk on $80. Even though this area is an area of high where there's a lot of liquidity, but price is showing a tendency that it doesn't want to take it out, and it's built liquidity there. So it's respected this low, and it's respected that high, and we know that high is going to be taken out, and this high is going to be taken out because of our bias. Our bias is no longer is going to be invalidated if we have a closure below 25383. So that's the level that we're looking at. So if we get a closure below 25383 on the hourly, then we're completely wrong on the bias for the day. But the bias for the day, I suspect, is long. So as you can see right now, we took too long to decide whether to get involved in this trade. But I wouldn't have got involved at the 495s in any case because I like to stick with a 20-point stop. So that would not have been me. Do you know what I mean? So yeah, so there it is. So it's pushed up. Um, so I'm interested in potentially taking a trade from here. Um, I'm not going to be a perfectionist again. That's what a lot kills a lot of people, especially me, looking for the perfect entry. A lot of people would have been happy just taking it at 495, putting the risk there. But no, because this is not my perfect setup, I'd rather take it, follow my rules. Uh, so let's just go back to MNQ. MNQ. So this is going to be my last trade of the day. So we made $360. We'll risk $100 off that to see if this trade idea works out. So by 2 micros limit. Um, although this is not the proper way to pass evaluations from what I see online of people that have passed multiple evaluations, they advise to risk 4 to 500, risk heavily, and then reduce the size if you lose until you get your starting balance, and then risk 500 per trade to get $1,000. But yeah, so we'll put 470. We'll put 474. Take profit. We leave it as that. 86. So, let's go back to. All right. So we didn't get our preferred clearance of this low. In fact, price just respected that low and pushed away. Could we have seen this earlier? No. The earliest that we could have seen it is when this candle closed. So when this candle closed in the range of this candle, that's the earliest that we could have saw that price is likely respecting this low. And it pushed away from it vigorously. So let's see if we get that push back lower. Maybe tap into the 471s to push higher. So I'll take this trade off the table if we take out the 563s. If the 563s are taken out, yeah, I'll take this trade off the table because again, what may happen is we've taken that liquidity, we may come back down again, then take this liquidity and then go. So that's the risk. So it looks like we're going for the 560s. There's a lot of liquidities there. It's 560, but yeah, I'll prefer. So what price? Okay, so let's see what price does. So price again may push up, respect this area, or maybe take that liquidity by one tick and then come back down to indicate that this is an area of resistance, and then we may get filled. But again, it's risky to hold on to the trade if the 560s is swept. So looking at this, I think there may be one more potential entry point, but I don't think we'll get it because if the 560s are taken now, as it's about to be taken, this will run, in my opinion, potentially. Let's just see. So we've taken it at the 560s. So I'll just cancel that order that I had on there. And orders. Cancel it. So Obviously now price gonna decide what it wants to do. It can run to the 630s. We know there's liquidity down there. Why is there liquidity down there? We've got this. We've got a lower high. We've got lower low. We've got lower high, and then we've got lower low. So we've got a bearish structure. We've got this lower high taking out this low. We've got a breaker structure there for push lower. And we've got this swing point respecting that swing high and pushing lower. And that means that there's liquidity because that swing high respected this high. So a lot of people would have saw that and entered short off of it. So this right now may run, push hard to take out this high. We may get another leg. So the leg that we got from here, from there to there, we may get another leg that literally takes out the 930 highs. But we've got one more opportunity for long. So the one more opportunity that I see that we've got for long is we wait for two candle closures above this range. So this is probably going to be the first one above this range. Then we wait for the second one, and then we wait for a push back into a retest of that breakout level, and then that may be the long entry. But obviously you're entering long at the highs of the range, which is not ideal. So the dark blue area is an hourly FEG, hourly FEG from the 4 a.m. candle, London session. So we've just been playing around it pretty much. We did have some reactions, but we did disrespect it a few times. We did respect it there, moved away from it, and now we kind of potentially respected on this 5 minute push up. I mean, look, people that were looking to go long there got totally destroyed on this move. Majority of them got destroyed because obviously not all of them would have had their stops down here. And then people that were looking to go short to take out the range lows again got destroyed because their stops would have been up there. They got stopped out. So there's a few longs in here, but not many. Alright, so we've got this kind of 5 minute candle closure. We're waiting for another 5 minute candle closure. And then we expecting price to use that range for a pullback into lower prices, and then we decide whether we want to take part if we see something we like. But again, going long off when you know there's liquidity below you is risky. It's always risky. And obviously on the hourly, we've got this hourly low. We've got this hourly low respecting this hourly low, so we know there's liquidity down there, but that doesn't need to be taken. Likewise, this is a spitting image. This hourly low respecting the hourly low is a spitting image of this 5 minute. We've got a 5 minute low here, respecting that 5 minute low and then pushing away. So this is the fractional nature of the market, which makes market so beautiful, fascinating. So we've respected that and then pushed away. So we wait for this 5 minute candle closure, and what we want is a lot of people are going to try to short the highs of this. Once this 5 minute candle closure forms, a lot of people are going to be expecting price to pull back into the range, and what we're going to do is we're going to wait for that pull back into the range. If we get it, to push to look for a long entry. I don't mind going for long as long as the 630 highs are not taken. If the 630 highs are taken, then there's no more liquidity that I can see besides the 930 highs. Obviously that is close by. Right now, the next draw is the minor liquidity, but the major liquidity is 630 highs. So these 935 candle highs, they're that kind of the low high. Okay, so this is the expected pullback. So this is a potential. So I got this kind of set up from Arjo. So guys, this is potentially called it's a two candle rejection. So we've got like two candle closures above this range. So this is potentially a two candle rejection, but we want the shorts to be trapped. So we want a bit of a lower push. But again, we have to be mindful that this two candle rejection may come down all the way here and give us the initial ideal setup that we're looking for. I wouldn't short this simply because it's against my bias. But I know that people are shorting this, hoping for price to reach the other side of the range. Obviously, there's no certainties in trading, and we can also do the same. But it's just against the bias. That's the risk. Okay, 1 minute. So I'm gonna see you try to make an entry after 1 minute. So we're just being patient, waiting for us to see what price does. Uh, Bias is long. We're looking for higher prices. Strong liquidity potentially 25,880. We're in a 5 minute range, and we've just swept the highs of the range. We've had a two candle rejection of the range of highs. Price is pushing lower. There's liquidity down here at the 5 minute range lows. We're waiting to see if price decides it wants to take it out, but I suspect these lows are going to hold, given that we've got this hourly low. What's going on here? Given the hourly lows, if we go on the hourly, so this 9 p.m. Eastern Standard Low was respected by the New York session. So this low was respected. This low, um, we suspect this low is going to hold. I suspect it's going to hold, even though there's liquidity down there. I'm just waiting for this 5 minute candle closure, and I probably will take an entry long my last trade of the day. I'm expecting price to react off this FVG to push high into the 630s. F11. Now there's a real risk that price wants to take out these range lows, but initially I had an entry at 474s, and my stop was the 454s. Because this fractal here, this low respecting this low on the 5 minute, then pushing away, it's similar to the hourly. This low respecting this low and then pushing away, and there's liquidity built up down here, and we want price to push up into it. So what we had was, let me see, we've got a range. Alright, so I'm gonna put my money where my mouth is, and I'm gonna, where are we? MNQs. I'm gonna buy. I'm gonna risk 2 micros. That's all you need. Take profit. Stop loss 80, 474s. Buy. Alright, let's see if this idea works out. So this is my second trade of the day. Although I did see the long setting up early on, I couldn't really. I did see a key level, and this low respected that key level. I couldn't get a 5 minute entry off of it, but I did take a short. I think it was at 614 to about 522s. So let's see what price does now. We're hoping that we don't sweep these lows, but the risk is if we do sweep these lows, we come for these lows. So I'm not, obviously there's nothing guaranteed in trading, but given that my bias is long, I don't mind taking that risk. It might be smart to wait for the 5 minute lows to be manipulated before going higher. But something's telling me, I don't know, maybe the market is conditioned us to think that lows are going to be respected, but I don't know. It's worth a shot. Alright, so we're in the trade. It's not an ideal setup because we've got no, we didn't get a liquidity sweep. Let's look at the hourly. we've also got an hourly close, which is not a smart idea. So I took this trade at the midday with a new hourly candle about to open. So I didn't really notice that until it was too late. So we can look at the 1 minute, see what my 1 minute is saying. We don't really notice much on the 1 minute, especially with the volume candles. So I'll just stick to the 1 hour. So there is a difference on the, the micro contract and the NQ contract. So sometimes obviously this is not exact alignment. So if you, I like to base my levels on the NQ contract, almost kind of contract, but on the MEQ, sometimes those levels are disrespected. So like today, a prime example is today. The key level that I was looking at today was this level here, and on the micro contract, it was actually on the okay. So it looked like it was disrespected early on when I was looking at it, but yeah. So we did get a reaction. Doesn't mean nothing, but we'll see. So you can see the violence of this trade now. Normally I would risk 20 points for 50 points. So ideally, if I should be taking this off like at 50 points, but I'm an idiot, so I'm probably gonna do that. so, um, so if it gives me 50 points, I really should take it. But yeah, I won't do it, man. So we've got the new hourly candle. Hopefully that gave us the momentum that we're looking for. hardest time in training, just sitting on the trade, man. That's the hardest time. Oh boy. I just so what we'll do, we'll just look at our analysis on the. So what I like to do, I like to over analyze things. So um, what we'll do is obviously we've got this 5 minute range now, and what we can do is just wait. So the range highs at 560s. Um, 560. The hourly lows at 494s. Okay, so what I'll do is just to manage the trade. I like my problem is I always over manage trades. So what I could do now is just say, you know what, we'll just put it at, you know, even though this is like taking off, like our idea is invalidated if the 474s is taken out. Um, so we want the 474s to be respected. Ideally, we shouldn't really be messing around with it, but we want a violent move push up higher to 630s. But at the same time, when you're 50 points in the money and you're getting stopped out for a loss, it's not a good feeling. So we could just leave it as break even in it. That's kind of the best of both worlds, really. Because I should not really be moving my stop until we get to the 560s. Why? Uh, because 560s is the 5 minute range highs. That's what we're basing this trade off of. Uh, so ideally we want 563 to be taken out before we move our stop higher. Um, and so we may come back down again to the hourly lows, the 494s. That's what I'm kind of concerned about. So this kind of lows, uh, you know, if it, stick with the trade idea and don't over management. Stick with the trade idea. Trade idea was 454. Yeah, that's the trade idea. Stick with it. Stick with it, man. What was it? 470. So price is reacting to, I think, these highs here, and these highs are part of this range here. So there's a range right there. So what price is deciding to do is either come back here and then go higher if he's going higher, or use that high in the second scenario to go lower. So this is kind of really key high here. You can ask me, basically this is obviously it's a fair value gap candle, but the way I like to think of it is, hold on, why is that particular range important? Let me just, I'm confusing myself here. So we've got a swing point here. So, yeah, so we took out this high, so we formed that range, and actually that's not the key. That's not the key high in question. The key high is this one actually. My bad. 1 second. Be right back. Yeah, I was wrong about range. I think the key range is here. I think this is the key range. So I think we'll get to the 550s. But then I'm kind of shook because obviously the price can come back down here again. Put in 2 candle closures below this range, and then reverse if we are going higher. So the initial range is from here to here actually. It's from there. That's the actual major range that we're in, that we're playing. As you can see, we've kind of swept this range, but that highs we haven't swept. So you would think that we're going for these highs, but anything can happen. and this is a significant level as well, right there. We've just broken out of it. So our plan, uh, ideally, was to go back on the NQ contract and watch that 5 minute level, and the 5 minute highs are 560. So if price does reach 563s, then I can manage the trade and move the risk to break even. And MNQ. Okay, so we've got there. Um, Now I'm tempted to get out 100 points. I think it makes sense to get 100 points, even though I think this will go to, um, it will go higher. Yeah, so we got 100 points because, we have to be realistic. We've risked 20 points, and we got 100 points. So that's like a 5 hour trade, really. That's the thing, you cannot be a perfectionist in this game. You have to get, what the market is giving. But ideally, we know that price is likely going for that 630 highs, and we know likely that price is going for the 880s. So I'll stick around just to see if we do push out to the 630 highs. Again, if you want to look into this, how to read liquidity, I think Marco trades from Inter Equity Trading does really good, I think, analysis on liquidity, where liquidity is, swing points, likely buys once the high is taken. So I would advise anybody to check his channel out, Inter Equity Trading. I think that's a really good way of reading the liquidity, and I think I've based my liquidity reading off of that, and I think it's improved my trading. Um, Another channel that I look at that I like to use, although I haven't really spent a lot of time on it, but I think it's a good channel. I think YouTube kind of presented it to me the other day on the algorithm. It's Gerald Trades. It's a guy that's basically from the UK also. He's basically got 100,000 payout from Topstep and a lot of other payouts from other prop firms. And he's basically showing how to trade, properly. I find a lot of good value in that channel as well. Um, in fact, what else? Um, Another channel that I use. I can't really think of any other channel that kind of inspired me. Yeah, I look at T trades as well. T trade stuff. That was really helpful in the beginning. T trades, yeah. T trades is really good channel as well in terms of looking at technical side of things. Into equity trading, I rate them highly. I really like his work, and also Gerard trades. I really like his take on how to trade prop firms. Because obviously he says it's a completely different ballgame trading prop firms. I'm going against his obviously the way he teaches. He says you should really risk heavy when you're trading evaluations, and I'm messing around with two Michaels, but obviously given the volatility, given the big moves, and I decided to risk small, and obviously that wasn't the ideal trades, but in both occasions that's why I risk small. But yeah, his work is good as well. Who else? That can't really think of anybody else that I've recently kind of got my eye in terms of trading. Um, So we may get a pullback now. May not. Um, but we can. Our expectation is that yeah, these high. Oh yeah, how can I forget? Arjo, Arjo, Arjo. I wouldn't say look at all of his works, but some of his stuff is really great. I like his take on fair value gaps. Um, I like his takes on. I think he called them order flow legs. I like his take on two counter rejections, which I find helpful and useful. For example, what he considers that two counter rejection is like, he goes when price takes a high, there's a potential for two counter rejection. As you can see here, we've had a closure above that high, and this is the two counter rejection point there, and that's what price is kind of deciding whether to take out or respect up here. And he also says the two counter rejections can also happen within fair value gaps. So this fair value gap, what we've had here is we've got push lower, we've got two counter rejection. As you can see, price, although it came back deep and swept the two counter rejection low, it respected it, it didn't close below it, which means that this two counter rejection held. So you can argue that potentially we've got a range here from there to there, and that potentially that's a dealing range. Yeah. So some of Arja's work is really great. I really like the two counter rejection stuff. I really like um, how to determine what type of market conditions you're in as well. He talks about different types of trends, um, which is good stuff as well. Yeah, so Arja's good. Not all of his work, but some of his work I think it did ring out, you know, it did resonate with me. Come on, push higher. All right, there we have it. There we have it, folks. We got the 630 highs. Um, yeah. It's a days of plus negative in terms of our management, but I think in terms of the real analysis, it was spot on. Yeah. Also, obviously, I don't want to be too hard on myself, but we did respect our game, which was to be patient. Yeah, and we just took two trades, and we used the profits from um, the first trade to take the second trade. So even if we did lose the second trade, we would have had something to show for today. But yeah, thank you for joining me. This was just probably just a one-off. Probably won't be back for a little while, but yeah, I've had this account since Black Friday sale. I haven't really updated the my notes to confirm how much it cost and how much my expenses are so far. But I'll do that today. And yeah, hopefully for now I'll probably trade again next Thursday. Yeah, see you then.